Okay, well, good morning, everybody. I think we'll go ahead and get started with our next presentation, in which we're gonna focus on exports, and we're gonna talk about U.S. dairy's position in a global market. Before we get to Will, who's gonna do the presentation today, I just wanted to give you a little bit of background and maybe make a few connections for you for the Dairy Checkoff and the U.S. Dairy Export Council, kind of how we work together. So for those of you who don't know me, my name is Nate Jansen, and I'm the Vice President of Farmer Relations and Outreach for Dairy Management, Inc., or your Dairy Checkoff. So as we think about how the Dairy Checkoff works, it's important to step back and think about that partnership that you see up here between the United Dairy Industry Association and the National Dairy Board. And those two organizations coming together is what formed DMI back in 1995, or Your Dairy Checkoff. And as the checkoff has evolved over time, there's been the creation of other organizations that you see on the bottom here that work on specific roles against dairy. But what we're doing as a checkoff is kind of harnessing the power of all those organizations and kind of working as an enterprise on your behalf. And doing so, we can multiply your investment and extend your voice in the marketplace. We can respond to evolving needs in dairy and do it through a structure that's really maximizing your local and national investment. So again, we're harnessing that power of the checkoff through these organizations, including USDEC. And as we work, our principles of kind of working in this way, clear expectations, structures, roles, and accountability for those organizations. Working against fewer, bigger bets, and I'm gonna point out what those priorities are here in a second. We want to be nimble and outcomes focused, and really work with a value and volume mindset. And Will's going to talk quite a bit about value and volume within the exports arena. And we want to work collaboratively within the industry. So as we think about what those four priorities are, it really kind of boils down to these. It's sustainability, reputation, innovation, and exports. And what we're trying to accomplish, or the outcomes we want to get out of working through those priorities, is obviously total dairy sales. We want that to outpace U.S. production. And we want consumer, not just consumer, but also customer and influencers' attitudes increase as they think about dairy as a source of nourishment and dairy as an environmental solution. And so to really kind of bring it all together, you can then kind of see how those different organizations work together in kind of that enterprise focus and how they work against these different priorities. And interestingly enough, USDEC plays a role really in all four priorities when it comes to sustainability, reputation, innovation, and obviously specifically exports. And that's what Will's going to focus on today, really kind of dive into why exports is a priority for your Dairy Checkoff. So with that, I'll invite Will Loux up to go from here. Thank you.
Thanks, Nate. I'll turn on my mic so folks can hear me, hopefully all the way in the back. I get the pleasure of talking today about exports. I do a fair amount of these presentations. I lead USDEC's economics team that works jointly also with the National Milk Producers Federation on domestic issues, but I really focus on the international markets. So that's what we're going to kind of talk about today. Just so y'all have a little bit of background for me, I grew up on a corn and soybeans farm in Iowa. Frankly, didn't really know how to farm because my grandfather was the one who was the main farmer. He passed away when I was young, but I learned the markets from my grandma. And so that's how I got connected in ag. I have been out in the DC area now for closing in on a decade, working first for the International Dairy Foods Association, and then now with the U.S. Dairy Export Council for several years now, been with them. Really all on the insights piece. So congratulations on joining one of the nerdier presentations I think you'll hear today. I know Phil's going to come after me at 2 o'clock, so he can, Phil Plord will also join in on that too. So we'll have plenty to talk about today. I'm going to talk about four main things today. First is just, so we're laying the groundwork, what USDEC is, how we work and how we support farmers like yourselves around the world through the checkoff program and also through membership as well. I'm also going to talk about why we do what we do through why we are so focused on exports. And then I'm going to kind of lay out how the US fits into the global picture, how we compete in a very competitive global environment. And finally, I'm going to talk about what I see as the outlook for our exports going into next year. So that's kind of where we're heading. I think we've got a small enough group that if folks have questions and want to stop me to ask for any clarification or anything like that, please do. I'm very happy to not have a 45-minute monologue. So happy to kind of have those questions as we go along, but we'll have plenty of time for questions at the end too. So let's start off first with what the U.S. Dairy Export Council is. As Nate alluded to, we're part of your checkoff program. So as a company or organization with DMI, we are really primarily funded through the checkoff program. And that really enables us to do what we do, which is to grow demand and access for U.S. dairy products overseas, to really build that demand. And a lot of it also has to do with industry collaboration, because we're not selling any dairy products as USDEC. But we work closely with our various members and give them the support through our international offices. And I think this is something that makes USDEC really unique. Fundamentally, there are a couple other organizations around the world, like Ireland has a similar organization that promotes exports, but they basically don't have any offices overseas. As you can see, we've got 10 around the world, including our Arlington office, but we've got Mexico, South America, Southeast Asia, Japan, Korea, China, Middle East, North Africa. We're covering really all the major dairy markets. And these offices around the world really are our boots on the ground, our eyes and ears. They help our members and exporters really know what's going on in the markets. They're our crucial insights component. They know the trade, they know the importers, they know what they're talking about, what they're thinking. But they also help us on regulatory and policy issues too. So if a new regulation comes out in Egypt, our Middle East office is going to let Arlington know, and we will make sure our exporters know so that they don't get caught flat-footed and get container ships stuck in the market. And at the same time, we've also worked closely on anything related to policy issues too. So similar to new regulations, also relates to any sort of government policy that's coming out too, whether that be a free trade agreement or something else, keeps us abreast. But a lot of what they also do is really building that demand. So their insights, their regulatory, their policy, they're all these things. But a lot of what they do is also working with our promotion activities, as we are a promotion organization, to build demand overseas. So we have events in these markets. We bring the trade, we bring folks who are actually making dairy products overseas using US ingredients, and help them use more US ingredients, help them see the benefits of US dairy, the reliability, the safety, the quality, in many cases, the ability to make specs specifically for a given customer, and they're working on building that demand around the world. So we've got these offices who are fantastic, but we wouldn't be able to do any of that without our membership, both in terms of processing companies and trading companies, as well as our allied organizations and those who support our exports overseas and the mission to really grow exports. Since we're not exporting anything, we need the industry behind us, and I think that speaks to the fact that we've got 110 members in an increasingly consolidated industry, speaks pretty much volumes as to what we've got in investment as far as the U.S. dairy industry goes for exports overseas. So that's kind of the U.S. Dairy Export Council in a nutshell. We're building demand overseas, and we're making sure we have access to these markets overseas to be able to compete in a highly competitive global environment. But why do we do it all? This is probably as nerdy as I'm going to get in this presentation, so bear with me. I'm going to make 3 basic points as to why we export from an economic perspective. So first, we do it for market balance. Second, we do it because it supports the farmer milk price. And third, and this one I think is really crucial, is ultimately, I believe exports are our future path for growth overseas. So on the market balance side of things, if folks have been at these presentations before or have seen somebody from USDEC present in the past, they've probably seen a chart something like this, where basically it shows US milk production in red is outpacing US domestic consumption in blue. That's something we've known, pretty much since the beginning, and why USDEC was originally created, is that we need to find a home for that gap effectively. And that home is the export market. Otherwise, it's pushing down price here in the US market. But the piece that kind of misses this, because we've heard from folks, well, why don't we just cut our production down to meet domestic consumption, is that it sort of misses the components within this. So this is on just a total component basis, milk, fat, protein, and other skim solids. But if we kind of break those apart, the US is about 95% of the US milk fat produced in the US stays in the US. So we're actually pretty balanced in fat. Folks know this, know that we don't export all that much butter, know that we don't export all that much whole milk, but we do some. But only 80% of the skim solids, the protein and the lactose, stays in the United States. So we've effectively got a choice. We can either be balanced in milk fat, which necessitates us exporting that 20% of protein and other skim solids, or we've got to be balanced in protein, which means we've got to cut our milk production by 20% and then import the rest of our fat needs, primarily in the form of butter. And I don't really know any farmer who wants to do that math, so really that's the main reason here, is we've got a choice to export. Otherwise, we're left with an excess of protein that weighs down the market if we don't export it, or we're forced to cut production. And I don't think we want to do either of those to meet up with this. So we've got to export ultimately for market balance today. And all of what we're doing right now also supports the farmer milk check. So if we think about the main drivers of pricing within the federal order formulas, it's butter, it's cheese, cheddar cheese in the form of blocks and barrels, it's dry whey, and it's non-fat dry milk. And in each of those, exports are crucial. Now, we only export about 3% of our butter, but if we have excess butter like we did in 2020, when butter prices were coming down well below $2, we actually started really exporting a lot more butter to the Middle East, even to Canada, as much as they'll let in, and also to Asia a little bit as well. So we're able to find a home for that butter if we start dropping prices and have a little bit extra, but it's not much, and I grant that. But on cheese, we're guaranteed basically to hit a new record year this year. We're waiting on 1 month of data in December, unfortunately, but pretty much we're going to look at US exports of cheese hitting around 450,000 metric tons. And that's a sizable record overall. And we'll talk about US cheese exports in general. But ultimately, it's worth remembering that for each really like 10 cents that the block and barrel price moves, the class 3 price is going to move by about $1. So if we didn't have these record cheddar exports that we were seeing here in 2022, our blocks and barrel prices would not have stayed above $2 for most of the past year. Because fundamentally, for the first half of 2022, US consumption of cheddar was down. But we exported so much more cheddar, we were roughly doubling our cheddar exports, that we were able to support prices going forward for much of that year. Same story on dry whey, where we export over 50% of our dry whey. And same story on non-fat dry milk, where we export close to 80% of our non-fat dry milk overseas. And all of that factors into the farmer milk check. But the main reason why I think we need to be exporting is that this is our future for growth. So these are a couple of confusing charts, but nonetheless, they're here. That on the left, you can see the volume and value of US dairy exports growing over time. We really expect that's going to continue going forward, because the chart on the right is more confusing, is effectively how much exports and domestic consumption have grown since 2016 in aggregate. And the blue line is exports, green line is domestic consumption. And you can see since 2016, they've both mostly grown by the exact same amount. And if we think through the pandemic, so just since 2020, US exports have grown by about twice the volume as domestic consumption here in the United States. So that's an astonishing figure, where if we want to grow, exports are going to be the critical piece of that. Because what we've seen over the past 10 years is that global trade, so from everybody, not just the US, has grown by about twice the amount as US domestic consumption. So there is a much bigger pie outside of the world that we can really capture. Whereas our market share in the US, we can only do so much. We've pretty much got it. We'll always have a freight advantage to Chicago versus Europe and New Zealand. But if we really want to grow, which folks do, then we've got to look to the export market. And even if you don't necessarily want to grow, your neighbor or somebody down in Texas certainly does. And if they don't have an export market, that's going to lower Class 3 prices for y'all. So that's really why we do what we do and why we're trying to grow exports overseas. So any questions on that? I just figure I'll take a pause. Yes? Yeah, probably, so folks in the back can hear.
Are we, for growing our exports, can we do that simultaneously while trying to increase our domestic demand? Because you hear, and that's Class 1 more than Class 3 in Wisconsin. We're dominant Class 3 state.
Right.
I get all that. But is it either or? Can they both be done the same? And what are your thoughts on that?
Oh, it's absolutely both in that case. So I say exports are the future because that's where we see a lot of the growth happening right now and we need to grow. But we've got to keep that domestic market because we are seeing growth still in cheese. So cheddar cheese consumption's bounced back. And that's really where we've seen the per capita growth. And the work that the checkoff does, your checkoff does through DMI and through these other organizations is really geared around that domestic market and building that demand. And we are starting to see success, and we've seen continual growth in domestic consumption too. It's just where we've seen more recently, when times have been tough domestically with COVID-19, with high inflation, exports are that opportunity to really diversify. Because I think that's the name of the game that we need to do is be a diversified industry across cheese, fluid milk, butter, you name it. And I think that's kind of the success story. So we've seen growth in both. I think they'll need to work in tandem together.
Thank you.
Yep. Any other questions or, all right. Now I'll talk a little bit of just how the US fits into the global picture, because we're not exporting in a vacuum, as folks are well aware. We've got really well entrenched competitors in the form of Europe on the far left, New Zealand next, and then the US. I mean, there are some other smaller players who do matter, certainly, in some key regional markets. Australia is a big exporter of cheese to Japan and China. That's their business, and they want to keep it. Argentina, really strong in Latin America. Uruguay, whole milk powder to Latin America, Middle East, China. But for the most part, when we think about global trade, it really comes down to Europe, New Zealand, and the United States. Those are the big markets that drive global supply, at least. Together, they encompass roughly 80 to 90% of global dairy trade, just those three, depending on the year and certainly depending on the product. So these are the ones that really matter. And the US has been playing catch up for the past few years, but what I think is important is that if we look over the past 4 years, roughly, you can see that the US is the only one that's growing versus a flatlining to actually a pretty sharp decline here out of Europe and New Zealand. So the US really is the one that the world is looking to right now for a lot of the volume growth. A lot of that has to do with government policy in both Europe and New Zealand. Europe in particular wants to enact a number of policies with a good aim to reduce climate emissions, effectively, to reduce carbon and methane emissions. But their route to doing so isn't through increasing productivity or through innovation. It's through having fewer cows, effectively. And so you've seen that policy show up in the Netherlands, which has a policy to effectively cull their herd by 30%. And you've seen that even in Ireland, which had been one of the strongest growing European countries for a while, also going down that similar route. So we've got Europe effectively saying, you know what, our path to climate neutral is just to not have cows, is not a sustainable solution, certainly if you want to feed the world or feed a demand that is clearly there, both in Europe and around the world. And then in New Zealand's case, they've simply run out of land and also have policies that are geared around effectively limiting expansion of dairy in the country. So whether it's water regulations or they have a new emissions standard that really limits how much New Zealand farmers are able to expand. So they've basically tapped out. And the US also has the most efficient herds in the world, as I'm sure y'all are well aware of. And we're actually, because folks in this room are investing and getting more efficient, the US is actually increasing its lead in terms of milk production per cow over Europe and New Zealand. So it's not just that, hey, we're able to expand, add some more cows, or at least hold steady in our cow numbers. We're also getting more efficient than their cows every year. But we've got different strengths and weaknesses. So New Zealand is basically the king of milk fat, largely because their domestic consumption is negligible, so they export everything they've got. So when their farms are putting out butter or whole milk powder, that's all going overseas. So they are pretty dominant in those, but they certainly play in cheese and skim milk powder. Europe is pretty well diversified, but in many ways they're similar to us. They have a very strong domestic consumption within the European Union, but when you aggregate all those different countries, they're simply bigger. And so they've been doing this also for the past 40 years, or 50 years now actually. They've been really focused on exporting a lot of their dairy products. So they're already well entrenched in this space. So we're kind of coming up and are the new entrant and are the disruptor into this market. But our portfolio is still largely concentrated today around non-fat dry milk, cheese, dry whey products, both in high-value proteins as well as in dry whey and permeate, and then also in lactose. But we are diversifying more into butter this past year, and we do see some fluid milk exports going out as well, although not to the extent perhaps of Europe, who exports quite a bit of fluid milk. So for us, one thing we need to keep in mind is as we think about exports, where are the opportunities for volume and value? So this basically shows on a component adjusted basis what global trade is in total volume. So whole milk powder is the largest, followed by skim milk powder. So that explains why skim milk powder is such a major export of ours. It's a massive market and we're moving a lot of it. Whey, the low, frankly more commodity whey, is third there. A lot of that goes to China. We see China being roughly around 40% of global whey markets. Nobody else even comes close. If you aggregate all of Southeast Asia, they're 35%. And so what we're talking about here is we're exporting a lot of whey, and over 50% of that goes to export markets. So we're pretty dominant in that whey space, but it's pretty low value. But then we've got cheese followed up, where the US is a lot stronger. We are behind Europe in terms of total cheese exports, but we've been growing much faster than Europe. And if you kind of disaggregate all the European countries, because there's 27 of them now, the US is actually bigger than all of them. So we are certainly strong within the cheese space too, and that of the major products is the highest value. So we're playing in this high value space too. So the US having a record year in value had a lot to do with what happened with cheese this year. And then we've got butterfat, we've got lactose, which is low value, but we've got butterfat, which is higher, and we've got high proteins, which the US is also the largest exporter of in the world, of WPC 80, WPI, and the US fits in that space too. So this is a similar chart showing basically where the US plays. You can see US is in red. We've got strong market share. We're the largest exporter of non-fat in the world, but Europe's there with us. Whey, we're right there with Europe. Cheese, you can see how big Europe is, but as I said, if you break it out, it's different. And then lactose and high protein. So we're getting more diversified basically every year, in large part thanks to cheese and high proteins moving us into that higher value space. And so where is that all going? Well, it's going a lot of places. We tend to be relatively diversified. Southeast Asia by volume is our biggest market, followed very closely by Mexico, but Mexico is our largest market by value. We've also got China, Japan, Korea are huge cheese and high protein markets for us. Canada, what little access we have, we fill it up, and we do export some butter up to Canada as well as mostly whey products. South America has been an increasingly important cheese market for us. Australia is actually is our third largest cheese market in the world, or fourth largest, depending on the year. And then we've got Central America and the Caribbean becoming an increasingly important market for our cheese. In fact, they had as strong a growth this past year as Mexico did in terms of our exports of cheese. So we're fairly well diversified, but playing in all these markets requires the investment of the Export Council helping our exporters have access and knowledge as to what's going on around the world. So that's kind of the US dairy position. And we can see that competition is fierce in a number of these markets. New Zealand loves to go to Asia, although they'll play some in South America too, and the Middle East. But in ingredients, the focus is Asia, in large part of where all the competition is. The US has a strong focus in South America and in Mexico too, but given our freight advantage, we're pretty dominant. But over here, it's China, it's Japan and Korea for high value, and it's Southeast Asia for both high value and lower and commodities as well. In cheese, it's similar. We're looking at the Middle East becoming increasingly important, Japan and Korea, and also Australia is becoming an increasingly competitive market for both high value cheeses. So we see a lot of diversity and a lot of competition basically around the world. So we really can't stay pat, even as Europe and New Zealand have structural problems. We have to invest in these markets if we're going to continue to grow and ultimately win market share in these markets. So as we think about what happens next year and the outlook for global markets, there's a few kind of things I'm looking at for what 2023 ends up being. So first off, as I said, US dairy exports are ready to set another record year in 2022. We're missing that month of data, but we've already hit the record for value. We're going to come close to $9.5 billion in dairy exports here in 2022, which is going to be a 25% gain over last year. Now, I will say, don't want folks getting used to this. A lot of this does have to do with higher prices that we've seen this past year. But it also has to do with the fact that our cheese exports are up 12%, and we've also had higher whey exports, including higher protein wheys in WPC 80+. So it's a combination of both a higher value portfolio, as well as achieving higher prices for our exports and higher commodity prices. Our total volume is going to be up 4%, and really the only product that we've seen decline this past year has been non-fat dry milk and skim milk powder, largely because we haven't made it. Fundamentally, with milk production being pretty tight in the US for the first half of the year, our production of non-fat dry milk was down, and thus our exports were down because we export only 80%. Or over 80%, of our production. So we're on a good path for 2022, and that came despite a very challenging global environment. If we look at global trade from all those players, which we do a lot of at the Export Council, we actually see that over the past year, roughly, you saw a very sharp drop in global dairy trade, driven almost entirely by what was happening in China. So this shows each market, whether they're up or down in a given year. And China was down about 16% and over 400,000 metric tons in component adjusted production, or of imports, So that's huge. China had a lot of problems this past year, as we all know, between COVID-19 lockdowns and certainly slower economic growth. But they also spent most of 2021 building up giant inventories. So they basically retreated from the global market, pushing a lot of New Zealand products, as they're the biggest supplier to China, onto the world market, increasing our competition in Southeast Asia and the Middle East and Latin America. But nonetheless, as I said, US exports continued to grow. And I do think that speaks to the investment that we've had and the committed customers that we have overseas. And we also, man, that messed up again. I don't know why that keeps doing that. But basically, we had a real problem with shipping this past year. What this graph would show, if it worked, was that the percentage of containers that left West Coast ports empty was at the highest rate basically as far back as the data goes. That we were roughly 70 to close to 80% of containers in a given month were being exported empty, despite having exporters clamoring for space on carrier ships, on container ships. And the reason for that was basically container ships were getting close to 10 times the price to run from China to the US as exporters were paying to go from the US to Asia. So they said, well, I don't really want to wait for a US export vessel. I'm just going to turn this boat around and head straight back to China, fill it up, come back to the US. And that was a real challenge for us. And our reliability suffered, especially in 2021, in terms of the speed at which we could get product to market and the reliability as to, this product's going to get here in February when it might end up being May. And it was largely out of the hands of exporters. But the U.S. Dairy Export Council, along with the National Milk Producers Federation, worked to get legislation passed on the Ocean Shipping Reform Act. And so we've seen a lot of improvement as of late, and that investment by the U.S. Dairy Export Council has paid dividends on the shipping front. So we are improving pretty quickly. But at the same time, that was a real headwind. So we had really significant headwinds last year, and we still managed to grow exports to a record amount. So where do we go next in 23? So this is the same volume and value chart from earlier. You can see we're closing in on $10 billion of export value and roughly 2.5 million metric tons of dairy exports overseas. And as I said, shipping conditions have improved, so that's good news for us. We will be more reliable this year than last year. Our customers see this. They see that basically the cost of freight has dropped dramatically, and that's going to be a boost to our exports this past year. But unfortunately, at least in the near term, that's sort of where the good news ends. China is still pretty absent in the world market. They, yes, have pulled down their inventories to more normal levels, but they're not really going to be driving the growth next year. And at the same time, we've got a really challenging economic environment globally. So this shows the global inflation rate. And so you can see 2022, was a very sharp year in terms of inflation, close to 9% globally. And yes, we're coming down in 2023, but the IMF is forecasting that we're still gonna have the highest this century, if not for last year, in terms of inflation. So that is still really high inflation. And how we're cutting inflation is effectively by raising interest rates, which is also having the effect of slowing the global economy. Now, the US economy actually looks in better shape than most around the world, but Europe especially, as well as a number of markets in the Middle East and in Asia, are having a tough time keeping their currencies afloat and also ensuring that consumers are not having income significantly reduced in this environment. So we're in for a challenging economic environment this past year. And one thing we've found at the Export Council is basically the two drivers of global demand for food is income and it's population. So population's probably not gonna move, but income will be impacted this year. So we think dairy demand should hold roughly steady globally, but we're gonna face some headwinds and it's not gonna see the growth that we expected, that we typically see. The good news is this is short term, and ultimately by 24, we should return to a much more normal economic environment with lower inflation and better GDP growth going forward. At the same time, supply is ticking up. So much of the past year, even though China was absent, global dairy prices for cheese, for ingredients, were all pretty high. And a lot of that had to do that nobody had any milk. So if you look at milk production on a global basis, this is year-over-year growth in milk production by the major exporters. So as I said, Europe, US, New Zealand, and then I threw in Australia and Argentina. But basically, for 2020 and 2021, we had pretty good milk production growth. And then as folks know, in the second half of 21, milk production dropped sharply, just as input costs rose, and you also saw poor weather conditions in New Zealand and in Europe. And so for much of the second half of 2021 and into 2022, the globe had less milk than it did a year ago. Now, US milk, if you adjust for components, was still positive, but otherwise everybody else was basically down with the exception of Argentina, who had policy problems to deal with actually exporting it. But that has changed as of late. Fundamentally, higher prices have incentivized more milk production. And so we've seen the US dairy herd, increase a little bit in the first part of 22, but really largely just be higher than what it was a previous year. So our milk production growth is roughly around 1.5%. And if you adjust for components, it's higher than that too. So the US is returning back to its pretty normal growth rate of between 1.5% to 2% adjusted for components. But what's really changed is that Europe has come back. So I mentioned earlier all the structural problems within Europe. Those are still very much there. But European processors, because they were desperate for milk last year, just kept fighting each other on price. They just kept raising it and raising it and raising it and raising it to the point that they were paying probably close to around $30 a hundredweight equivalent for their milk. And that has finally incentivized some European farmers to say, hey, we might be able to make some more milk. Now, we're not going to go build a new farm or really expand our barns. What we're going to do instead is make sure we're not sending as many cows to slaughter, and we're going to do whatever we can on the feed side to boost some productivity. So you are starting to see some milk production growth out of Europe, and that has really changed the dynamic in the global marketplace. So you've seen global prices ease. China's still absent, which is when we really started to see prices drop, but it's accelerated here over in Europe, largely on account of the economic environment. Their domestic demand is weak, and their supply is growing. So globally, prices are falling. The US is managing to, at least in cheese and butter, is managing to hold steady, but the ingredient side of things is coming under pressure, largely on account of this increased supply and a very challenged global demand environment. But as I said, US milk prices are still historically strong. We will still continue to see prices well above historic norms. These are kind of my own eras. But roughly what we're seeing is milk prices around or above that $24 a hundredweight on the all milk price. That's probably going to continue for the near term, but we'll have to see where things go here in Q1, Q2, especially as global prices fall. Likely there might be some weakness on the cheese side too as well, just given the difference between Europe offering their Gouda at $1.60 a pound and our block being around $2 a pound. Those will probably close, and either Europe's going to come up to us, which I think would be ideal, or we'll move closer in tandem. But input costs are still elevated. So, we've got natural gas prices have come down a little bit, crude oil come down a little bit, corn futures have come down a little bit, but ultimately we're still some of the highest input costs we've seen over the past decade. These are still very high input costs, as you all are well aware. And so I'm not forecasting all that much growth out of the US, but I think it's going to be a pretty normal year. I don't see us adding a whole lot more cows to the dairy herd this year, but I think we'll continue to see good productivity growth, both in the form of liquid or milk per cow, as well as on a component basis. And those two will keep our milk production running at around 1.5%, I think, over the next year, maybe a little bit less than that if prices fall in the first part. But ultimately, we're going to have milk production growth, and thus, we're going to need to export. Because given this economic environment, I'm forecasting that we're still going to need significant growth out of exports in order to keep the market balanced. And so I'm still forecasting growth in volume, but value could take a hit just as prices have weakened here in the first part of the year globally. So this is kind of gearing up towards the final part of the presentation, and I think I'm pretty close to on time here. So just the main takeaways. There's plenty of competition from Europe and New Zealand, and in the short term, it's increasing. Their milk production's improving. They're focusing on the export market as their domestic demand, at least in Europe, weakens. And so we're going to have plenty of competition. So we've got to continue that investment, even as structural factors put us in the driver's seat of global trade and of growing exports. But as I said, economic realities are probably going to challenge demand this year. And we've got China going to continue to remain subdued. Now, they're not going to decrease by 16%. I feel confident in making that forecast this year. But they're probably not going to grow more than 3 to 4%. And that's good, but it's not enough to really boost global trade like it did in 2021. But there's still plenty of potential for US exports to grow. I'm looking at cheese potentially growing this next year, just given domestic demand factors, as well as the increased production and increased capacity that we're going to have online here this year and into the next year. So I think cheese and whey will continue to be our growth sectors and potentially see a bounce back year in non-fat as well going into next year. So that's all I had prepared, but happy to take questions on anything related to global markets, domestic markets. I know Phil will be up later to talk more global market or domestic markets, excuse me. But happy to answer any questions y'all have today about USDEC, exports, or anything else y'all desire. We'll go here first and then go in the back.
Why is there still a shortage on infant formula?
In terms of exports or here in the US? Yeah, so right now it seems like, oh, sorry. So the question is why is there a shortage of infant formula? So ultimately the shortage seems to have abated, at least for the most part. A lot of that had to do with the Abbott facility in Michigan getting shut down for a number of months. And so what we saw during that period is there just isn't enough productive capacity in the US to make up for a facility of that size being shut down. And that facility is also where all the specialty infant formula was being made by Abbott. And so as a result of that, there just wasn't that much capacity to be able to meet that. So we did see an uptick in imported infant formula. We saw a lot coming from Europe and Mexico, particularly Ireland over in Europe. But a lot of that was product just moving in and backfilling where it was needed. But right now it seems like, at least from everything we've seen both at the store, and I've got a 5-month-old, we've now returned much more to a place of normalcy. And I also think there was some short-term hoarding involved too, as things were genuinely short, but then that exacerbated the problem. So right now, I think overall we've returned much closer to a place of normalcy. But there's still globally good demand for infant formula, but a lot of that is manufactured overseas versus here in the US, except for the US domestic market. And we kind of were short based on that plant closure. In the back?
As large as China is, why could they reduce their imports so drastically with the population they have? Is it because it's too expensive right now in the US?
Yeah, so the question is given China's size and population, how can they reduce their imports so dramatically? The answer is twofold. So one, on a population basis, China is obviously huge, but their population also isn't growing anymore. So ultimately, the big growth factor within China is increasing per capita consumption of dairy products. The good news is that China's per capita consumption, generally speaking, has been growing. But what happened in 2021 is, if we remember all the shipping issues, where if you tried to order basically literally anything, it got delayed for several months as everybody dealt with shipping problems. China looked at that. It looked at European milk production being really weak. It looked at New Zealand having terrible weather and said, oh crap, we need all this product just in case. And so they built up their inventories significantly. So they were like, we're just gonna hoard all this stuff. And then 2022 came, they had a lot more COVID outbreaks. They didn't really know what to do effectively, or I don't wanna say they didn't know what to do. They had all the COVID outbreaks, they locked down very fast and just said nobody's traveling or moving if there's COVID anywhere here. And so as a result of that, domestic demand suffered within China. And at the same time, they had these big inventories. They had domestic production within China, which mostly goes towards fluid uses of domestic production. That was still growing. So they had growing production, they had heavy inventories, and they had weaker demand. I think a lot of these factors are temporary, but that made them really pull back sharply on imports. They just didn't need as much because they had this excess stocks on hand. But now, I think we've seen a situation where their stocks are much more normal, but their demand still isn't great, and their production is still growing, but not as strong. And so now we're back into a situation of where does China go next? And I think we'll return to growth, but it's not gonna be as strong as it was in 21. They just don't, with shipping improved, with European milk and US milk production growing, I don't think they see a need to return to a just-in-case inventory style. So what that means for us here in this room and in the US is ultimately that China's demand will be fine, but it's not really gonna be the savior to global markets to keep prices at historically high levels by itself, at least. Yep.
Why did the global shipping costs drop so dramatically?
Yeah, that's a great question. There are two reasons for it. I think the first one is fundamentally the interest rate hikes done by the Federal Reserve to cool the US economy worked at cooling the US economy. So we saw consumers, everybody in this room collectively and in the US, really not buy as many durable goods as they had been in the pandemic as we all started working from home, whether it's well, maybe not all y'all, but me, I was working from home for a good year and a half, and instead I was like, I need a desk. Maybe it's outdoor furniture or something else that we needed, and we just were all buying all these goods. But then as the economy cooled down, really there wasn't that push anymore to really be purchasing all those goods. And so instead, that import demand, because we were bringing all these goods in from Asia, really dropped off. At the same time, you also had the retailers, think Target, think Walmart, at the same time deciding, you know what, we probably don't need all these just in case, umbrellas if there's not going to be a run on umbrellas, so we're actually going to cut back. And that's just across the board on all of the goods that they're offering. And so as a result of that, we've actually seen imports drop below pre-pandemic levels on the West Coast over the last 3 months. So it's below 2018 in terms of goods imported. So really demand has dried up. At the same time, you've had container ships and carrier companies who had record profits for the past 3 years. They took full advantage of that situation. They built a whole lot of new ships, and those are all online, and now there's too many ships for the demand, and so you've seen prices fall. Frankly, all that is really good news for exporters, and it's good news for US consumers. That's gonna mean cooler inflation. It's not gonna be as strong as it was this past year, and it's gonna mean for us on the export market, it's gonna be cheaper shipping rates overseas. So we're happy about that development, and I think a lot of that also has to do with the policy of the Ocean Shipping Reform Act also helping us alleviate some of the carrier concerns. Yeah.
I have a question on the Middle East and India as well, kind of South Asia.
Yep.
Obviously, there's some cultural issues in India and stuff like that, but how are we doing communicating with some of those new areas? I mean, China's always, ever since the mid-90s, the Chinese diet's going to find protein. Yep. We've taken full advantage of that. There's something more we can do. But it seems like the Australians and the New Zealanders have kind of figured out kind of that Sub-Asia, Middle East. What do you think our American strategy has been? Has it been effective in that area? Have we cut through those cultural things? Or just kind of fill us in on that, if you would?
Yeah, happy to. I'd say in the Middle East and North Africa, we're in a pretty good position. So we can export, especially cheese. We've been doing pretty good business in Saudi Arabia, in the UAE, in Dubai, as well as in some of those other countries in the region as well. Specifically, the Arabian Peninsula tends to be a trade hub that then goes to South Asia as well as Sub-Saharan Africa as well. So we've done well in those markets. The issue that we always face in those markets is it's Europe's back door, like their next door neighbor. They have the same freight advantage that we do in Mexico. So it's tough to compete on ingredients if it's a price thing, but we've built a good business, especially in cheese. What I'd like to see in the Middle East going forward is some more development of the high-value protein space. That is an area that they're relatively underdeveloped, but you also see culturally a big investment at gyms, at sports nutrition, and that's a huge market that we really can concentrate in. It's just been very expensive for much of the past couple of years, so folks have been hesitant to really utilize those ingredients. But we're making inroads. So I'd say in general, especially on cheese and high value, we're competitive in the Middle East. They have had some issues of late. I think Egypt especially. I was actually there. We were hosting an ingredient buyers conference. We brought in suppliers from the US as well as the major buyers of North Africa, all to Cairo to discuss and build deals and talk about the US reliability. And a number of export deals were achieved there, but at the same time, they also were in the midst of a currency crisis. And so US exports overnight effectively became 10% more expensive. I mean, that's true for Europe, that's true for New Zealand. So their demand just took a hit due to a bunch of economic factors. So there's kind of this hit and miss that we always have with the Middle East. I think US exporters tend to favor Asian markets and Latin American markets because that's where we're more on equal footing versus our competitors. India is much trickier. Short answer is we don't have access to the Indian market. So that's the major issue we face. Fundamentally, India wants to do everything they possibly can to protect that market. So the main hurdle that we run into now is what's called the health certificate, where they basically want to prove that US farmers aren't using blood meal in their feed, and USDA or FDA won't guarantee that that's not the case for us. So we can't get this certificate. We have been working on FDA and USDA for 20 years, and we'll work on it for another 20 years, I'm certain. But it's also true that as soon as we get that health certificate, I can almost guarantee the Indian government is going to create a new certificate that will be an issue. So that's our problem with India. We have managed to move some exports in there creatively, and I don't want to ask too many questions about how we do that is, I think, the path for me. I think there are some opportunities there, given the size of the market, given the importance of dairy to India, but they're going to do everything they can to protect that market. Yep, in the back.
You showed that our exports are, or our imports are declining. Is that going to make any progress on making our trade deficit improve from where it's been in the trajectory of the going forward?
Yeah, that's a good question. Are you talking in dairy specifically or in total imports overall? Total imports overall. I think in the short term, yes. I think a lot of that also has to do with how inflation has really taken a hit on consumers, all of us here. I mean, my grocery bill is now twice what it used to be, seemingly. Granted, I now have a 5-month-old, so that's maybe part of it. But another big piece is I think retailers kind of went crazy after COVID, that we saw a big uptick in imports just to make sure that they had it on hand. So I think our deficit was really bad, effectively, during that 2020 and 2021 years. I think it'll improve from there. I don't see a major structural change that would say we're going to really drop that deficit outside of some short-term changes right now in the markets. So, because ultimately, the only industry in the U.S., or basically the only industry that has an export surplus, is agriculture. So if you want to get a trade agreement done, basically agriculture has to be really, really loud saying we want an agreement with Japan. And we're kind of the ones carrying the water, because you have a lot of other industries or labor saying they don't want a trade agreement, or they're just kind of ambivalent. And so there are some industries that certainly are on board with trade too, outside of just agriculture, but we're the loudest in the room usually in Washington to get a new free trade agreement that would help alleviate that trade deficit, is we need more trade agreements, frankly. Any other questions? All right.
The Russia conflict and what's your forecast? What do you think about that? Will that have any bleed over with alliances with China?
Yeah, I can't believe I went a whole presentation without mentioning Russia, Ukraine. I think that's a first. I think it's kind of gotten into the background, but it's still very important. Fundamentally, Russia, Ukraine didn't have much direct impact on dairy markets. Ever since Russia invaded Ukraine the first time and took Crimea, Russia banned all imports of dairy from Europe, the United States, New Zealand, basically. So Russia went from the biggest importer of cheese in the world to overnight being absent from the global market. So that's why we saw prices crash back in 2014, or one of the reasons. But it had a major impact on those input costs. I cannot forecast at all what I think is going to happen from a political lens. That's just not my area of expertise. But so long as that conflict lasts, I think we will have supply issues on everything from oil and natural gas to particularly on the feed side as well. One of the interesting, kind of pieces of that is, Ukraine was the biggest producer and exporter of sunflower oil. That actually matters a lot in dairy, as some ingredients use, or some finished products use a lot of sunflower oil overall. So we'll see where things go. Ultimately, I think right now input costs are coming down, but I don't see any reason to suggest we're going to have a big increase in supply out of that region, at least. So folks are looking to, on the feed side, U.S., South America, seeing if they can boost production and continue to. But otherwise, I think, on the natural gas side, I think energy prices are going to be high for a while unless we really invest in renewable fuels. And we won't see any returns on that for about 10 years. And I think that's kind of what we're expecting. All right. Well, seeing no more questions, I appreciate everybody's time and the engagement, and happy to talk with anyone afterwards as well too, but really appreciate the time and the chance to speak with you all today.